Ladies and gentlemen, the infamous US stock market predictor Tom Lee has predicted that the S&P 500 could hit as high as 7,000 points soon from the current level of 6,400 points. And there are certain conditions that could help the S&P 500 remain strong towards the end of the year. And let's watch on what are all this about. So today's title is about S&P 500 reaching 7,000 points. These two critical events that could make it happen. So this is an analysis of Tom Lee's latest market outlook and the potential path to this new high and what these two critical events are all about. As usual, my usual disclaimer is that this is a video for entertainment and for education, not as a financial advice. Let's go. So Tom Lee has came out with a new article that says that the S&P 500 could reach as high as 7,000 points if these two conditions are met. Now, it's important for us to understand why I'm so fascinated by Tom Lee. Well, Tom Lee has made several accurate predictions over many years, and he's the head of research at Fundstrat Global Advisor. He has built a reputation for being very accurate, and most of the time, these predictions are made in the light that they are in contrary to most analysts out there or most trends out there. And we'll take a look at some of these predictions. So Tom Lee correctly predicted the 2020 V-shaped recovery when consensus then during the COVID crash was this is going to be a prolonged weakness. And during the crash of 2022 to 2023, he also reminded everybody that the market is actually very resilient and we should be bullish. And it turned out to be right as well. And in the crash of 2025, he also accurately predicted that the Trump tariff crash would actually be a very short-lived thing, and it proved to be correct. So what are the two conditions that are critical for investors to believe in if the stock market is to go up, and in his opinion to hit a high of 6,800 to 7,000 for the S&P 500. Take note the current level for S&P 500 has a bit softening. It went down below 6,400, but he thinks it could go as high as 7,000 soon. So this is what he says, right? The two macroeconomic conditions is number one, the Federal Reserve must do a decisive dovish pivot. That means that they will do a rate cut. Okay, ideally September. Right, cannot wait for too long already. So September have a rate cut, and the ISM Manufacturing Index recovery decisively will reach above 50 threshold, confirming that there's a production expansion. If there are these two conditions met, then equities will go up in a big way. Now, I think I have to clarify one thing about the ISM Manufacturing Index. So the ISM Manufacturing Index is a monthly indicator of US economic activity based on a survey of purchasing managers at about 300 manufacturing companies. So they have a pulse of the market. So by doing survey of these 300 manufacturing companies, their purchasing managers, the government will have a good feel of what's happening of the economic activity. So let's remind ourselves what these two critical events is. Number one, after an extensive pause that's happened for a long time, the Federal Reserve will soon signal and eventually implement interest rate cuts, providing liquidity and support for equity valuations and even a bond price recovery. The ISM Manufacturing Index must go above 50. And if that is so, then it's confirmed that there is a resilient and robust economic activity growth and could potentially drive earnings growth as well. So he emphasized that these two conditions must happen together to create the path and the lubricant for the S&P 500 to hit as high as 7,000 points. Now let's see what he actually says. He thinks that the S&P 500 in about mid 2025 could hit, which is soon. Given now there's August already, could hit 7,000 points. Then towards the end of the year, it will soften to 6,600 points because of just a normal market profit taking, softening, whatsoever. So that's just being a bit more cautious. But if that two conditions are met, ISM Manufacturing hit above 50 points, and the Federal Reserve actually have a strong, decisive rate cut, then it could hit 6,800 points to even recover back to the 7,000 point. That's what his prediction is. Now, there are additional support drivers that could help drive the stock market up. They are not as big as that two factor, but if the stock market or the economy reflects some unemployment risk, then the Federal Reserve could potentially provide what we call a Federal Reserve put. Okay, and this is a very technical term because that involves options. But basically, is that the Federal Reserve would be likely to provide the support to before the market crash. But in short, by being more relaxed on the monetary policy, cut interest rates and so on. So there is also a possibility of Trump now driving more and more economic activities by cutting all the administrative red tapes that are happening right now, and having more pro industry policies and things like that. And to be frank, he's doing a lot of that. There is potentially a earnings per share growth as well. In short, many companies are registering more and more profitability. And the last one is that there is potentially a softening of US dollar. But softening US dollar, while you might think it's bad for the valuation in your local currency, but the softening of US dollar actually drive sales up for many of these US companies, because a weaker dollar simply means the price of their exports become cheaper. So all this will help in the driving of the entire stock market up. These predictions could all be wrong if some things like this would happen. And I need to give you some of this risk assessment. Number one is, what if the Federal Reserve remain restrictive? And this scenario will likely happen if the inflation proves to be very sticky and prove even to go up. We know there are some signs of that could happen. Producer price index have hit a strong high, and that scares the living daylight of many people for a while. And if that flows over to the CPI, which is the inflation consumer price index, then that will be a very serious problem. Another possibility is the manufacturing index comes out to be weakened because of all the things that are happening around the tariff war and things like that. Then that two conditions have at least some failures already. It could be a earnings disappointment, weaker than expected profits, or a seasonal correction, just a softening of market that refused to recover. So all these things could happen as well. Okay, so we're looking for strong signals from these two indicators. Well, my personal takeaway is this. I do give Tom Lee a very high regards, and I think his forecast does matters. I'm not saying he's 100% correct, but I just want to highlight that he has been consistently accurate, right? He was right since 2000 in all the market crashes, and where all the market has been bullish. And he was one of the few people that are very contrarian in his outlook, meaning that where everybody thinks is going to crash, he actually thinks that you will recover or he's going to go up. So his track record commands attention even among skeptics. So I think if many people look at him, maybe we should at least take a look and bring it in as an additional data point. So I would consider it to be wise at least to be part of a few indicators that you bring, but not the only one. And for those people who actually think that maybe this is a signal for me to go in, I can't tell you what you should do. But yesterday we have a very good video that done some very powerful analysis that says that even in the emotional dollar cost averaging scenario, where people actually only start buying in the market rise, and when market falls, they actually cut some of their positions and things like that. Even position like this, you could actually make quite some money as well. So I think that number one, you should watch that the live stream that we did, but more importantly is to be very serious about looking at some of these opportunities. All said and done, stock market is all about investing for the long haul, and at least 5, 10, 15, 20 years. And research has shows again and again that if you invest in a globally diversified index and you hold your counters for very, very long, you are proved to make money most of the time. And some of this short-term volatility is just part and parcel of it, and maybe even provide some of buying opportunity, and let the power of compounding happen, right? So different counters compound differently with different level of risk and volatility. But it's not a matter of will or will not for the S&P 500 to hit 7,000. It's a matter of when. So I think that if our time horizon is long and our financial patience is high, I think we're going to reach there. Let's just sum up with his key takeaway. There are two critical conditions that must happen for the S&P 500 to hit 7,000 points and stay there. So number one is the Federal Reserve must do a rate cut and be dovish about it. There's no point doing a rate cut and just keep telling everybody, we are going to look at the market and potentially going to increase the interest rate and things like that. Just scare the living daylights out of the finance community. And that's not called a dovish stance. So have a decisive dovish stance with the rate cut. And number two is for the ISM to go up above 50. If these two things were to happen, then the upside of hitting 6,800 points to 7,000 could happen. So Tom Lee actually predict that somewhere soon we're going to hit 7,000. You then soften to 6,600 or so, okay? And it could stay there until the end of the year. But if the two conditions that we mentioned happen, it could recover 600, 1,800, maybe back to 7,000 as well. So this is a very powerful, interesting prediction. Let's watch on. Now the question is, Mr. Lu, how am I going to know when Federal Reserve with a dovish cut and ISM will recover 50? Well, number one is that please hit subscribe, because I will let you know. I'll be watching these two indicators now like a hawk for everybody. But number two is that we could actually program artificial intelligence to give us this insight as well. And I've been educating everybody on little AI tips here and there during my live stream. So do join us at night. Normally I start around 11 p.m. Okay, and we end around 12-ish to actually share some financial insight and learn new AI skill as well. So please join us. Okay, and happy to see you tonight. Okay, bye bye.